House to Home, presented by Remax Diamond Realty.
Coming to you on a Tuesday. That's what we do here on House to Home. And we in the Zoom room are filling out the square today because normally it's Liz and Gina and myself. We got our good friend Mike Rudolph from CMG Home Loans. Now, Mike, welcome back to the show. It's always good to see you, my friend.
Thank you, Jason.
Okay, and the last time we had you on, you were with Norcom Mortgage, but technically CMG has acquired Norcom, and you're basically in the same role with a newer company.
Yeah. So what happened was in about April of this year, CMG purchased all of the retail branches of Norcom. And they were not licensed. CMG was not licensed on Guam. So the acquisition of this branch didn't really take effect until July. But some of the same people came over. There's a lot of great new people at CMG, and it's a lot of the same products, but better service. I've already noticed the rates are better, and I think that has to do with the size of CMG. They do about $20 billion a year in residential mortgage originations. That's top 15 in the country. So they are a very, very large company with a tremendous amount of support. And what's great is from every person that's involved in a loan or in the operation side, all they want to do is help every single customer every time, all the time. And they view the realtors as customers, they view the title company as customers, and of course the borrowers as customers. So everybody gets the same treatment that you would expect the actual, borrower to get. And it's really refreshing, and I'm really happy to be here.
All right. Well, I really enjoy my friends succeeding. So congratulations to you, man. And it's a match made in heaven because that's exactly what Liz and Gina do here on the show is
Yeah,
truly customer service and matching people up. So,
absolutely.
Gina, you wanted to bring on Mike because we kind of like name dropped him last week about some of the new opportunities and some of the lending options that people now have with the interest rate having dipped a little bit.
Yeah, the interest rate dipped a little bit, and that's really spurred activity. But what I was excited about last week was I had a home that it's a fixer-upper. It was not typically financeable at the other lenders. And so, but I was the listing agent. I had it on the market. The home needed repairs in order for the home to be financeable. And typically the buyer has to be willing to do the work and put up the money up front because my seller was selling it as is. And so that's the typical way you would do it. If a buyer was interested enough and had money out of their pocket enough, then they could go in there and do the necessary work and then hope to get the financing. But what CMG offered, and we actually, after a year of being on the market, a lucky buyer was able to get their loan from CMG, which included having all the repairs done after closing, which was the important part to my seller. So my seller is super, super happy. It took him a year, but he was fixated on his price. He wanted his price and he was willing to wait for it. And so we got both. We got a happy buyer that was able to do a great financing program with CMG. And we have a wonderfully happy seller. And of course I'm happy because I sat there and got it done and waited with the seller, and the buyer now has the opportunity to own a home in a really great price range. And that was really the most important thing. My seller got the price range they wanted, but the buyer got an affordable home. And so we were hoping that Mike would give us a little bit of or push the program, because this gives buyers who don't want to be in that higher price range or cannot be in a higher price range, this gives them the opportunity to use this program and to acquire a home.
Right. And Mike, every time you've come on the show, you've always been good enough to tell us that, your previous company, and I would assume that carries over to the new ownership, is there are various loan products of which people may avail based on, financial position, military service, first-time homeowner, a lot of that stuff. But you also have like a wide variety of things that people can take advantage of that they probably wouldn't otherwise consider.
Right. So we do the VA loans, USDA loans, regular conventional loans. And like in this particular scenario that Gina was talking about, this was an FHA loan program, which falls under their Section 203, which is a renovation product. So you get money for the purchase and money for the renovations all at once at closing. And the repairs have, typically, Gina's correct, repairs have to be done prior to closing. This particular program allows a borrower to get the funds at closing, and the check for the renovation is made payable to the owner, the new owner, and the contractor, and they get the work done within a relatively short amount of time. We're not talking, 6 months, it's a little bit less. But it's a great way to, one, move real estate that's perfect for starter homes, that would, maybe not be able to be financeable because the seller doesn't want to do any upgrades. So you've just left with the pool of cash buyers, and it's a great way to give affordable housing options, more affordable housing options in a market where housing on Guam is not cheap. It holds steady. And this is a great way to move some of that, less picked over
Fixer-upper.
real estate.
Yeah, the fixer-upper homes.
Sure.
Yeah.
Well, Liz, maybe you can provide a definition for that. Is what constitutes a fixer-upper on Guam? And if you have a property, how can you list it as such? I mean, does it have to have substantial damage, or does it have to be of a certain age? And
Well, some of the homes that, that aren't financed, so each home, in order to be financed, has to be habitable, which means you can move in, everything is working, the plumbing, the electrical, and the ones that are not habitable are the ones that normally are not financeable. But in this particular loan type, they package it so it so for example, you don't have a kitchen, and we've had a number of properties that had a kitchen, but it was outside the concrete structure. It was under a wooden structure, and then it was falling apart. They didn't have a real kitchen. It was more an outdoor kitchen. So this loan type will allow for renovation to either put in a real kitchen in the concrete structure or to extend it. So there are different things that they can do. And we're excited about it because, I mean, the last time I did this type loan was like 20 years ago. And that loan was allowable, and then they stopped. So this, I think we can start moving the fixer-uppers. So again, if it's didn't have certain things like a bathroom or a kitchen, this type loan will allow for it.
right. And Mike, we don't want to by any means like frame fixer-uppers as, as damaged goods or buyer beware or anything like that. They're just a unique type of property that can still be very, very much moved. And as you said, you can save a lot of money.
Oh, absolutely. So, I think in general, this specifically this property, I think it was the kitchen and the bathrooms that needed some help. There wasn't anything completely terribly wrong with the property. It was a little dated, and it was a little worn, but the kitchen, not having certain items in the kitchen puts it in the category as uninhabitable. But with a modest investment, you make it habitable, and it's a great starter home. And it's just a great way to get people out of the rental market and into homes, because there's nothing that will help improve their finances and their home life than, having their own castle.
Well, now, Gina, having said that now, do you think this will stimulate like the local market, both from the buyer and seller perspectives, to list such properties or to go around like looking for them?
Well, yes, sellers with fixer-uppers, they've been able to list the properties, but most of our market has been investors, cash buyers, investors who want to get in there. They pay cash because typically the lenders cannot finance a home that's not habitable. They can't give the loan. And so we ended up, normally we know our target market are investors with cash. So that what they would do is they would buy these fixer-upper homes. They would make the necessary renovations. But, any investor is looking for a good return. So they don't normally do the renovations minimal to make it habitable so they can keep the price range within a reasonable, affordable range. Their goal is to make money on the money that they just put in to purchase this property. I don't blame them for that. I'm just saying that that's an investor's goal, is to make a good return. So typically these fixer-uppers are fixed up, put back on the market, but then, you know, it kind of kicks the buyer whose price range is probably under 350 or under 400, kicks them out of the ball game, because, you know, most of these homes are put back on the market at a higher price point. But now with this loan program, these buyers that are trying to save money, or maybe you can afford to pay 500,000, but you don't want to. You're trying to be conservative because you don't know what's going to happen in our marketplace. You don't know what's happening in the future, and you want to be conservative, or you just want to be conservative, period. And that's not a bad thing. So if you can take advantage of this particular loan, the FHA 203 at CMG, and then now you could look at those fixer-uppers that is in perhaps the right location for you, but not maybe the worst house in a good location for you. You pick that up. You already know what it's going to cost to do the renovation because you make the effort to bring a contractor to price it out. And maybe you have 60 to 90 days to do all the work and you move in and it'll feel like a brand new house. So this gives those buyers an opportunity to buy.
And Mike, you were saying that the timetable, because we always tend to talk on this show about like, you know, like what the turnover over time is in terms of months or weeks. And you said this one was a little shorter than, you know, like the 6-month period. Are these type of transactions a little more narrow than what quote unquote normal transaction would be?
Well, the rate at which you do the renovation is a little bit tighter because this is kind of like it's kind of like the diet version of the 203K, and then you've got, you know, the supersized version. The actual once CMG took over the loan, I believe this loan came in prior to when it was under the Norcom banner. But once CMG came in, Gina, correct me if I'm wrong, but I believe we closed the loan within 60 days. And then now the buyer is, you know, based upon the scope of work, he's probably going to have those renovations completed in about 2 months.
Yes.
Whereas if you're going to be doing some sort of major renovations, you can go to the larger FHA renovation program, and that you have to get done that within 6 months. But you can go up to 6 months just based upon the scope of the renovations. But this particular one, what needed to be done wasn't wild. It was manageable, and the buyer's going to have, it's going to feel like a brand new car, you know, brand new used car. It's like it's his now. He gets to make it his own when he moves in.
The beauty of this program, though, is in the past, this type of loan allowed for the renovation work to be done prior to the closing of escrow. And in this particular case, they will fund it, and you could close escrow. The work can be done after, but within, of course, a window of time. So
and that's a big advantage to the sellers because they don't want to have a protracted you know, purchase period. They would like to close within whatever a normal time frame is, and I believe that is usually around 60 days or less. So they don't really want to be waiting around to close this this portion of their life to move on to something else or whatever else their plans are. So yeah, being able to do the renovations after the buyer takes possession is fantastic.
Okay, everybody, forgive me if my next question is like in any way awkward, but do these types of loans and categorizing properties as fixer-uppers, does that also apply to the commercial market, or is this strictly residential?
CMG only focuses on residential, so not commercial. So, you know, with Liz and Gina, you know, they have commercial listing experience with both buyers and representing buyers and the sellers. So I would defer to them on their experiences with what their customers have been able to finance.
Okay, Liz, does that kind of thing exist in the commercial market?
No, not a fixer-upper. So if someone's purchasing, of course, the standard process of the appraisal, unless, of course, an investor is buying it with cash, and they usually try to use cash as leverage to reduce the price. And again, depending on the demand for that particular type property, it may work, and then again, it may not. But your standard loan type for commercial would normally take 60 to 90 days. I would say around that. Use the 90-day window for a commercial loan because there's certain things that the bank will require which is a little different in comparison to a residential type loan.
Okay, well, I mean, notwithstanding, if you and your family are trying to move into a really, really good house and you don't mind putting in a little bit of sweat equity and elbow grease, you could get a really good deal out of this, right, Gina?
Yeah, absolutely. And we'll help you. We'll steer
Yeah.
you in the right direction. We'll help coordinate whatever it is you need. What we're promoting is the idea that now if you're in a lower price point, now CMG's got the program for you, and we want to help you any way you can. Give us a call and give Mike a call. Start with Mike because he needs to tell you what the top number is going to look like. And then with that, we can work backwards to say, okay, let's go target the house in this price range. This is the
Right.
list of things you can look at, because when you buy it in this price range, you're going to renovate with this amount. And you know, we're not going to be exact on the numbers with renovation, but we know roughly what the amounts might be for you know, if it needs bathroom, kitchens, you know, that kind of stuff. We can eyeball it and tell you, okay, let's go talk to that contractor or this contractor, get a quote, and then go back to Mike and package it, because you can add up the numbers and they'll come out. So yeah, you always want to start with your loan officer so that he could give you the top number and will help you organize the rest.
There you go. So you start the process with our friend Mike Rudolph over at CMG Home Loans now, and we'll end our segment with Mike right now. So Mike, as far as contact information or, you know, social media handles, where can people actually find CMG?
So our office is located in the DNA building on the 5th floor next to Senator Bloss. And then people can always reach me at 486-3131. And my email address is mrudolph@cmghomeloans.com.
All right, very nice. Okay, if you guys have in your address book Mike's old email address for Norcom, just change the domain name. You'll still be able to get it.
Yeah.
Hey man, again, thanks for the knowledge, Mike, and congratulate. I know when companies acquired, it's not an easy process, but certainly this is Guam prospective homeowner.
Guam ended up on top on this one.
Absolutely, we are going to be the beneficiaries of this transaction, and it's always good to have you on our side, man. Mike's good people, everybody, so he's going to help you out, as will Liz and Gina.
All right, thanks, Jason, Liz, Gina. It's great to see you guys.
Thank you.
All right, thanks so much, guys.
Thank you.
House to Home, presented by RE/MAX Diamond Realty.